Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, February 19th, 2025. It is 12 p.m. Eastern Time, so I'm starting the video. And here's what I'm going to do in this order, roughly. I'll try to stick to this. That way, if you want to skip ahead. As always, remember, you can hit the settings button, go down to that little settings icon, the cogwheel down on the bottom right of any video, and increase the playback speed 1.25, 1.5, 1.75, whatever you like, and that kind of gets you through them a little quicker. You can also skip ahead, and if you drag the little slider, the time slider at the bottom, you do it that way, you can see what chart is being discussed. So again, you may not have any interest. Sometimes I cover futures contracts that you might not be able to trade or care to trade, and you can just skip ahead to the next thing. Here's what I'll do in this order. I'll try to stick to it. The grains first, and that's kind of a trio trade. They run together: corn, wheat, and soybeans. Then I'll stick in that agricultural commodity arena. We'll cover a quick update on coffee. OJ, I've been giving you updates on that one yesterday. Told you it took a long today, started long. LE, live cattle, is worth mentioning for those of you that trade futures. Of course, on the grains, we do have ETFs and ETNs, so I'll cover those. And then a lot of the other agricultural futures or commodities only have futures contracts that track them. I'll give you a quick update on the precious metals, mainly the ones that I usually will trade in lieu of if I'm not trading the metals directly, and that's GDX, the gold miners, or the metals. I want to do an update on platinum, palladium. Those I have better convictions on right now in gold and silver. But somebody just asked me yesterday, I think it was, and I posted my thoughts on gold in a chart there. Maybe I'll cover that. Let me add that to my notes. Just real quick updates on those. Carvana, oh man, it looks good. Their report tonight, and I want to get you that chart real quick. Obviously, they have a history of big moves post-earnings, so we'll see where they go. I'm going to share my thoughts and the chart in this. And then I'm doing this in backwards order only because there's just not a lot going on in the equity markets. My posts have been light lately, and that is a reflection of I make a point not to sit there and if there's nothing new to report or I don't see any trading opportunities, I'm not going to just throw out content for the sake of content. That's not what this site's about. When I see opportunities and I'm trading actively, my posts pick up. I'm doing 2, sometimes 3 videos, even more a day. I'm getting multiple charts out there. I know that a lot of you prefer the what I call static charts, screenshots. I'll do that as well. But I will go over the equity markets and the VIX at the end of the video. So there it is. Let's dive into the charts. This is corn. We're just going to look kind of bigger picture right now. Corn, as mentioned, like many commodities, I believe, ended a secular bear market back when the markets bottomed in COVID, when COVID hit, March of 2020, and have begun, in my opinion, case I've made many times in the past, even before there, with the big divergent lows, that was most likely the initial leg up in a new secular bull market in commodities, and and I do like commodities going forward. I think the RR is infinitely more favorable than the equity markets if you're looking out longer term. And more importantly, maybe that's wrong. That's the only guarantee I will give on this site is that I'm going to be wrong. I'm going to be wrong a lot. I share my opinion. But what I can tell you factually is as important it is to investing, I believe a diversified portfolio with asset allocation is just as important in trading. Over the years, I've been more and more personally and on the website trying to spread my bets around with various uncorrelated assets. That's stocks, bonds, commodities, crypto in the stock arena, long, short, large cap, small cap, different sectors. Basically, those with the most bullish and or bearish charts. Bullish charts are going to be long and strong. Bearish charts are going to short. All right, so there's corn, and the update to give you is, it's playing out well. I have, some longer-term targets. Again, this is a long-term trade on the site as well as a swing trade, meaning long-term trades are trades that are trend trades, expected with holding periods of 6 months or more usually. And I just wanted to point out that we have the grains. I'm going over the ETNs here for you because I know just about everybody on the site has access to these. There's currently we're at this downtrend line and this level right here. Again, I'm on a weekly chart. This is big picture, very important. It's about $21 right there on corn. You see 21.96. We'll round that up to 21, and a nice, clean, beautiful downtrend line in which to trigger a buy signal. You also have this 200-week EMA down there. I don't know if you can see that orange line. We took it out back here, and then we broke it right here. So this is what I'm looking for. If we can pop that, put 21 clearly in the rearview mirror, especially on a weekly closing basis, that should open the door to that next run up there to about 23.12. Again, I have different targets for you on the daily chart. I'm just going to keep this video. I don't want it to go an hour long, so we'll just stick with these weekly. That would be my next target up there, and then we'll see how it goes. Like any trade, stops are going to be commensurate with where your entry point is, your average cost, your outlook for the security. But there's an uptrend line in price support there around 1848 that really, ideally, any pullbacks should be contained around that level right there, as well as the 200-day moving averages. I think if you can see them here, these blue and red lines, we took back the 200s there. We back tested them right there, back tested. We broke them right here and then rejected, and we recently took them out. That's these blue and red lines. And so that is additional evidence that we're in the early stages of a new, larger uptrend. And so that's it. However, we're at resistance. So translation, what does that mean? Do you add to it if you haven't bought any yet, or if you're already in it? No, you either wait for a pullback to support, or you wait for a breakout above that level to add to your position. To me, these are core holdings, long-term holdings, and they're all doing well. And again, you have targets on the daily charts that have been updating these trades for months now, well until last year when they bottomed. All right, that's corn. Wheat, which tends to move together, has been lagging a little bit, and I've highlighted that in recent videos over the last couple months, that when we see this kind of underperformance from one or the other, usually wheat underperforming, it will play a game of catch up to corn. Just like corn, wheat is at a downtrend line, pretty key downtrend line right there, off the highs, and we're still coming off that big divergent low, which is also off long-term support. And as I told you at the time, I liked it even better, the fact we dipped below that long-term support, because that gave us what we call a bear trap. Yep. False sell signal, sucks out longs, blows out their stops, sucks in some bears that'll short it, and then when you get the reversal back above the support, that's when they all started to get cooked. Those shorts start seeing their positions going underwater immediately, they're losing money, and they start stopping out. Either way, that's my analysis on the charts. You've got a little bit of a price resistance if I take that candle, come across there. But again, so we need to clearly pop this level here, and then these are some initial longer-term targets. And, so far so good. This is a weekly chart, so it doesn't look like a lot, but that's, it's a good 15% run off the bottom so far. And, I've given you targets on the 60-minute chart. We broke this trading range, the daily chart. There's that bullish falling wedge on the daily. And so, again, looking good, but I want to see a little more upside. And then these grains, when they run, not as much, but similar to natural gas, which has just been smoking lately. When they finally break loose, they can really, really run. And these upside targets may seem aggressive, but to me, that's just run of the mill. I mean, look where wheat was just as the ETN. You go back to the futures, probably even higher. Look where it was back in 2012 when we were in the coldest. We were coming off, we're well in the lowest and longest low inflationary environment, virtually no inflation, zero interest rate policy. And now we are still, even though it's abated, we're still in one of the hottest inflationary environments in over half a century. Again, it's one reason to like commodities longer term right now. And that's it. So the other one is soybeans, SOYB, or ZS if you trade the futures, as you would already know if you do trade futures. There's your downtrend line, just like the other two. Enough reactions to validate it. And just like the other ones, I like, this is my simple but effective, strategy for trading, whether it's short-term charts going for little quick moves or longer-term charts like a weekly chart we're looking at. These are divergences that build for years. That's how divergences on the weekly chart. 2018, we started building positive bullish divergence. Then we took out the primary uptrend line. She was off to the races, and then nothing goes up forever. You put in a divergent high, you had correction one, a couple corrections off that one. We double topped, and the divergence only got larger. This is still just an extension of this divergent high, and then that gave us this nice correction, which again I view as a first counter trend corrective wave in a new ongoing bull market. Pulled back right back to support about 2067 with my beloved positive aka bullish divergence at that low. Now we need to do just like the other two, corn and wheat. We need to pop that downtrend line. You can see it comes off the recent highs. Pop that trend line. Should take us up here. More of a resistance zone, if you will. I'll give you a second line. Would be your next target. But again, if this whole bigger picture thing plays out, it's in commodities continue to gain some traction, then it's certainly not unreasonable to think that we can make new multi-year highs, and that would mean taking out these previous highs. So there's your updates on the ag commodities. Need to punch up. Just give us another, I don't know, 4 or 5%. Obviously, the higher we go, the more we put those resistance levels in the rearview mirror, and the more that increases the odds we're going to go on and hit these next longer-term targets. All right, let's talk while we're on agricultural commodities. Now we got to go to the futures. Again, I've mentioned we used to have futures that track coffee. That was JO, the company that had most of these ag commodity ETNs. They retired a lot of them a couple years ago, and that was, in my opinion, most likely due to the disinterest. What happens in a long bear market that lasts for years, nobody buys them anymore, and it's just not viable to the company. Just like now in reverse, you're seeing a proliferation of Bitcoin ETFs. That is a signature, a typical move of a top is near when you start seeing that, and you start seeing these one-time, like NVIDIA, there's ETFs now you can buy to go long NVIDIA instead of buying NVIDIA. It's ridiculous. You have like these 2-time leveraged bullish long NVIDIA or the FANG ETFs. Those again are they're just kind of traits that you see towards a frothy market top. Either way, technicals are the technicals. So that's soybeans there. Need to break that trend line just like the other two. That should take us up to these next targets. Let me get back to coffee now for you. Okay, this is the long-term chart. My weekly chart of coffee goes back into the mid-90s, as I've talked about many times. Coffee just it's in its nature. Every so often, it tends to go parabolic. Those are these curved uptrend lines. That's called a parabolic advance versus a linear uptrend line, and that's what we're in now. And those have a history not ending well. Usually get equally powerful reversals, usually about 50% drops. So that's my target on coffee. When we zoom down to KC Coffee Futures, 60-minute chart right here. Oh, there it is. All right. We recently put in, and on the contract, this one has more liquidity now than May. The previous one, the March, had made a new high, and it was technically divergent. This was equal, slightly lower high, but for all intents, negative divergence because you had steep, much lower lows in the indicators. And then you had these just nice, clean sell signals on that break of that trend line. There's a little minor kickback rally, still well below there, the uptrend line, and then this minor trend line, as you can see. Here, I'll zoom in for you, broke today, and so that should be hopefully the next leg down. This one again has a lot of downside potential if it holds, and it may continue up. I think I feel confident, I can't guarantee it. At this point, we hit that 392 target the other day, bounced off that. I believe when that one goes, it'll be clear that the trend has reversed, and then we'll probably take out that parabolic uptrend line as well, and then that should open the door to a pretty good move down. Either way, this break of this minor uptrend line on this kickback rally is an objective entry, although it's going to stop trading for the day soon. Remember, they have a lot of these ag commodities have quirky hours. Coffee, I think it's like 3:30 a.m. Eastern time to 1:30 p.m. Eastern time, as well, if I'm not mistaken. But you can look that up. Okay, orange juice futures, OJ. Again, only available if you trade futures. To the best of my knowledge, there are not any ETFs or ETNs out there that track it. As always, if somebody knows otherwise, feel free to post it on the site for myself and others. But there it is. Blew right through that first support level, hit that one. So I showed you today. I took a position, started a position, looking for at least a bounce back up there. And if we continue lower, I'll add two. But right now, my plan is not down below that level. So what happens again? This one, it doesn't show it here because I'm on a shorter term. This is a daily chart. Go back long term. This one went parabolic, too crazy high prices in coffee. A lot of these ag commodities just gone through the roof, as I've talked about lately. But it's just a beautiful uptrend line, drop, sell signal. And so looking for a bounce, and then we'll kind of play it by ear. But that one, again, deeply oversold. Oversold's not a buy signal in itself, but I watch multiple time frames. I've got this chart here. This is a 5-minute chart right now. And it hit that support level, as I mentioned in the post I give you today when I updated natural gas. I included the chart. OJ told you I took a position this morning right there. We hit that was the same support level we hit on Friday. We hit it again today. And now you have this, you've got some divergence forming on this 60-minute chart. This is a 5-minute chart, but it's a 60 as well. You had virtually an equal low there with higher lows on the indicators. So now you've got this little trading range here. So if they can pop that up, that should trigger the short covering rally to up to that target I showed you earlier today on that in the post I put out there, which is also, where did it go? Right here. Nope, that's coffee. It's OJ right here. About just under that 368 level right there. One more. LE is starting to look interesting. You have an uptrend line. This is a 6-month chart with hourly candles. Uptrend line off the low. We pulled back with a bullish falling wedge pattern, complete with the requisite, or at least what I like to consider requisite, positive divergence I like to see there. And so that one may bounce. I'm considering a position in this. Don't have one right now, but the case can be made. It's at support. We had one false break. Well, it's actually a breakout and a back test of the wedge. And so I'm gonna study a few of the longer term charts. I just kind of noticed this one today, so I just wanted to share it with you. If you take it, stop just below the uptrend line and this price support there. That's about 193, 105 right there on LE. That's again live cattle futures. Okay, quick update on the metals. I just pulled this video up. That's back from January 10th because that's when I covered, the last time I covered palladium and platinum too. I like that. Actually, yeah, it was the last update on those. I like those. We were already long. Remember, we were long GDX with impunity. We went right there. That was when I threw it out at the last trade idea along right there off the top of that support zone. We hit the first target. As the arrows showed at the time, I expected a pullback followed by one thrust up to my second and final target. That was then a little over a month ago. This is now GDX. That was a 60-minute chart. That's how that chart trade was based off of right here. And that was it. So, oh no, that was actually the daily. My bad. I gave that to you on a daily chart, daily time frame. This was it. So we went long right here. That was where the trade was originally entered with a long entry at the top of that support zone down to, but not below the support zone. So we never made it there. So the initial entry held. Hit T1, that was when I was doing the video right there. Pulled back exactly as expected, about as much as I expected there. Thrust up, hit T2, and we closed it out. Quite often I'll milk, the entire run of a trade, from bottom to low of a trend. But more often than not, I would like to just get shear most of the meat off the bone. So that was where the final target was. I exited, that's it. However, now that brings me to where we are today. Looking ready for the potential short pullback trade here. But I'm going to study gold and silver a little further. I haven't really dug in deep. I gave somebody my opinion the other day, some charts, but here's what I can show you. A nice clean up trend line in which to trigger a sell signal, or if you're bullish, you buy a pullback to support. Again, this is super simple. When you see well-defined support, you have one of two things you can do. If you are bullish, you buy a pullback to that support with a stop somewhat below. If you are bearish, you wait for a break of the support. What you don't do is short a pullback to support. You either buy that with a stop below or you wait for it to break. The other thing to note, you have a potential high-level bearish PPO crossover that would coincide with it. This is a high-level this is a zero line, so what I call, it's this term I made up, high-level bearish PPO crossovers. There's one there, one there. I'm just looking at the easy ones, and you can see what happened after we got. There was one right there, right there, right there, right there, right there, and so you've got one coming here. So it looks like GDX is likely poised for a pullback. I will have to sharpen my pencil. There's that uptrend line. This is the same trade here, just on the 60-minute chart. There's the uptrend line, and there's that 60-minute negative divergence that I like to see. So GDX is called a setup right now. I'm passing along. There's the trade setup. Wait for a break of that. Targets, at least, we're in a pretty good uptrend in gold and silver. They've been, aggressively buying pullbacks. Looks like the euro could start to climb soon, so that would actually help. Falling dollar and rising euro tends to help gold. Gold's been able to do this despite the dollar not really helping it much. So either way, that's the setup. The other two I wanted to cover, can go back to that video right after GDX. I covered, let me hit the mute button here. I covered platinum. Showed you platinum, gave you these price targets, highlighted the breakout. Actually, I covered platinum and palladium a little before this, right before the breakouts. I was bullish on those, threw those out to you. And I went too far forward. PPLT, where's my palladium? There it is, palladium 2. And in that video, if you go back, it was, I told you, it looks good up to at least my 91-ish target right there. That's what I was covering in the video. So that was then. That had just broken out. Also coming off support, so let's update those two for you. I already updated GTX. There's palladium. Again, that was time right there. There was the breakout right there. There was my 91 target. That went on, got hit. We had a reaction. We've been correcting or trading. I define a reaction as one of two things. When you're going up, a reaction is either a reversal, and I use the analogy, dropping, you have a hard tile or concrete floor, drop a tennis ball or a hacky sack. Hacky sack's going to stick. And the tennis ball bounce. So this is a reaction. A reaction to me can either be in time or price. So far, this is the more bullish of the two. It's a reaction in time. We pulled back off the initial tag of my target, but we've gone mostly sideways, and that's consolidation. So if we can punch up there, that should open the door for those other targets. And again, we have nice positive, aka bullish divergence at long-term support. That's why I started highlighting it back here. Again, it's not a runaway trade, but potential to run up there to that next target about 100 and change. That's PALL, and then PPLT also continued to move higher. That last update I gave you a month ago was right there. Went up, hit that 90.63 target. So far have pulled back. I have a little uptrend line forming here, one that you could either buy pullbacks to or set a stop somewhat below. And if it continues higher, you can see the potential targets marked here. I'm going to move that one a bit higher there, and we'll just leave that one there. And again, it's kind of a, it's been in a big long-term sideways trading range. So at most, just, can swing trade, buy around the bottom of the range, sell at the top. However, sooner or later, like all ranges, these things will break one way or the other, and that's likely to determine the next trend tradable, long-term swing tradable trend, whether we get a downside or an upside break. All right, so here's gold. Gold's going to determine where GDX goes ultimately. Zoom in. This is a daily chart. We've had this big, and I've talked about just big divergence. I always say divergence, just like overbought conditions, is not a sell signal, it's a condition. Condition that often precedes a trend reversal. That was a divergent high there. Correction. There was a divergent high there. Correction. This was our last divergent high right there. We had a nice correction. This is just an extension of that divergence. In other words, there was the previous divergent high right there. There was your correction. This is an even larger divergent high. And so you can see I have a trend line right here that, if taken out, will most likely bring gold back to at least 256.86, which would be a drop from where we're at now. of about 5%. Remember, GDX will move in a multiple of gold, meaning it probably 10-15% if that happens to gold. And then there's a longer term uptrend line and price support just below it there. And on the 60-minute chart, I haven't updated it. I told you in a little while here. Let's see. Oh, there it is. I did. I gave somebody my 60-minute chart the other day. It's in the comment section right there. So we had a little whipsaw. I think that was Friday. And back above this minor uptrend line right there, although we just cracked it again. Either way, you have 60-minute divergence on the 60-minute chart. You had on the daily. I highlighted that divergent high there, put gold as a short. We hit my first, second, third, and fourth targets. Let's see, T5 we reversed just shy of, hit T4. And to drop now, again, minimum would be this uptrend line, then this level here, about 261.50, and then maybe down to that. At this point in time, my current preferred final target, if you want to call it that, about 257, little north of that. I always like to cover a little bit above support. But, you know, whether I usually don't trade gold. If I'm bullish on gold or bearish on gold, I'll usually trade either silver futures or GDX or individual miners. You just get more bang for your buck. So there's your update on the metals, including platinum and palladium. Let's talk Carvana. They report tonight. I threw out Carvana as a trade idea, short trade idea back here. This is my daily chart. I know it's a busy chart. I'm just going to draw over the lines, show the key levels. This uptrend line right here is a secondary, or what I call a BOD. This is my primary trend line right here. Comes in, you have nice, everywhere I'm putting a little line, shows the reaction lows on that level, on that trend line right there. And so as I highlighted recently, we broke down below it, had a nice breakdown, and then I highlighted the back test of that trend line right here. And we've been continuing to back test it. So what's happened is, we've set up, again, this is the primary trend line was broken. We've been back testing. We have this little wedge as we've been back testing the primary trend line. They report tonight. Big negative divergences. At this last high, we didn't have a divergent high. Now we have, you can see lower lows in the indicators in the PPO and RSI against higher highs in price. They report tonight. It's a nice looking setup. Now, I have to say this. I traded this stock for years. This sucker moves after earnings. So it's not for the faint of heart. One strategy that I like to employ with a stock like this is, you know, take what you're willing to lose on a trade. Because see, if you go with shares, there is absolutely no way to mitigate other than hedging with options, which gets expensive, buying puts against your long position or anything like that. The problem with a stock that has a history of big gaps, you know, 20% plus, can bypass the most well-placed stop. So let's say you wanted to short it, but you only wanted to allow yourself 8% stop, which I think would be tight for a stock like this. It's so volatile anyways. The thing about that is stop loss orders, they can't be filled in pre-market or post-market, only stop limit orders, and those can get bypassed. Even a stop loss order turns into a market order at the open if the stop price is triggered. In other words, if it gaps down or gaps up 20% and you're short the stock and you had 8% stop loss, you're going to get filled at that 20% opening price. So if you can say, well, okay, I'll take, I'm willing to lose whatever your number is. I say $800. Buy $800 of puts on it. And if the thing continues on up and just blows on by, if you buy near dated puts, then or whatever month, you give it more time if you want, then you're limited to that. You buy $800 of puts, expire worthless. That's what you would have lost on shares if you stopped out. Just one strategy. And again, based on the charts, based on the technicals, last divergent high right there, we had a 20% drop. The time before that, we had a 28% drop. Time before that, we had a 36% drop. Divergent high before that, 56% drop. This time around, I gave you targets that last time I highlighted the back test. This is that longer term uptrend line. It's been crawling up. S1, this is still T1 and T2. T2 very, very low. All these targets right here. So the maximum right now on the 60-minute chart. Let me see if I had any additional targets for you. No, that was it, T4. Okay, so I'll go back to the 60-minute chart. So right now my max target on this one is about a 76% drop. I know very aggressive, obviously, but again, this company, I know fundamentally I've read a lot. Their shenanigans going on. I think this is the next WorldCom. One day they'll come out that have been cooking the books, and I think that'll come through in the share price. But either way, it's the setup is there. Nice negative divergence across the board, 60-minute chart, daily charts. Plus, we already broke down. We've simply been back testing to make a marginal, incremental, and still are actually bigger divergent high right now. So there's Carvana. Not for the faint of heart. Take it, don't take it if it's not your cup of tea. And then now let's wrap this up with the indexes. Let me actually, so I don't forget, let me start out with the VIX. The VIX is pretty much the stock market in reverse. I've been highlighting this recently. One reason that my updates, my analysis has been, especially on the equity markets, on the lighter side, is because volatility, there's nothing happening. The markets are just kind of hovering around. We're still in the big trading range here in the VIX. You can see this purple box for months now. And the VIX, like I say, is a hit and run instrument. I've highlighted numerous trades going back here. We were long there, milked the good part of that 372% rally there. Highlighted these divergent lows, and I've been highlighting recently this divergence that we currently have in place. And I just need to pull the line a little longer since my last update. So the divergence has not only not been taken out or negated, it's just gotten longer. So here we're making a series of equal lows in the spot VIX with higher lows in the indicators. And so if there's a catalyst, there's plenty of things on the economic calendar. Carvana shouldn't move the stock market, really. The next big thing earning-wise, and the only big thing, in my opinion, left is NVIDIA. I think it's another week or so before they report. But so look for a blip up here. Now I'm going to get to the equity market. What would be the trigger to cause this next blip up, which would be roughly from where we're trading today, about 50% run. And again, if this level gets taken out, and I've talked about this quite a bit recently, I believe if and when this gets taken out will coincide if those red lines that I've given you on QQQ get taken out. So I'll get to that right now. So there's the VIX. You can't trade the spot VIX. You can buy futures on the VIX or options on those futures, or you can buy one of the many VIX tracking ETFs. This one I've shared with you before. This has been the kind of the go-to proxy if you don't trade futures. VIXY. There's others out there, but I like this one because it's not leveraged. You don't need leverage when trading the VIX. That's like buying a $500,000 Ferrari and then taking it to your mechanic and telling him to put nitrous oxide on the damn thing. It's overkill. And so this is VIXY. There's a nice downtrend line off the highs. If and when taken out, will probably run us up here to this target. That was the target back here on the last trade. This is the last time we had an official trade on it, and we hit that right in pre-market. Almost a perfect tag of my 58.28 target, as I mentioned, pre-market. So you don't see it here because we're not showing the pre-market trades. And that's also now, that was then, and it's even better because we hit it in pre-market, defines the top of this trading range, which again, the VIX will just let loose if QQQ breaks that red line that I've given you, which we'll get to now. 60-minute chart, there it is. I have it on many different boards. I have the daily. It's this purple trading range here, or on the 60-minute chart, it's this 500-ish level here. I know this is a busy board. Let me see if I have a cleaner board. No, that's all I have. On the futures, it's a little cleaner, if you will. So again, it does a pretty good job. It was the all-time highs back here. We tested. We had a breakout to new highs, back tested it here. So this is where it just defines this box, if you look at it. And again, this is why my updates have been low. We're in the box. We're at the top of the range. The MO is pretty simple. You go short and sell your longs at the top of a range, and then cover those shorts and go long at the bottom of the range. And or as if you're an active swing trader, that's what you do, or you wait for a breakout above the range. I've shared my thoughts that any breakout, I don't believe, will be normally where it normally might trigger the next long-term trend. In other words, 20-30% upside in the markets. I feel pretty confident it will be a failed breakout due to the technical posture. I've talked about that. We have big divergences on every time frame out. 15-minute chart, 60-minute chart, daily, weekly, monthly. And so I believe any breakout will be marginal and fail. If we do get a breakout, we still haven't got it yet. You can look at, you can see where we're at and turn off all the lines. We're back at that previous high, so we're smacking the trading range. And that's it. Now, as I said before, I'll get to the futures. I give you these green lines that I said if we pop that, there's a good chance they're going to run at and try to take out the previous highs. So that's why I gave you the green line. And my preference, as I said recently, wait for a failure back below the green line. It's at 534 right there on QQQ. And that'll be pretty clear to the masses, again, even if we go a little higher, that the breakout has failed. And once you re-enter a trading range, odds are you're going to go back down below it, especially after a false breakout. It can increase the odds, and you're going to even go down and break the bottom of the range. But there's that 500-ish level, key support, roughly, that I think will, if we break that on QQQ, if and when, that's where the VIX will let loose and probably break out of its comparable trading range. Remember, this is just looks like the VIX upside down, right? Futures tell a little better story, like the futures charts. I have different boards here. All right, let's stick with this is 3 month. Let me go to this one here and let me pull it out to a 6 month here. Okay, well, okay, same thing. I have the green line right there, which again roughly defines in the red line the bottom of the trading range. So that's my box, the same box, if you will, roughly on QQQ. And we're right now flirting with the top of the range. We have not made, there's the previous all-time highs in the futures. We're still below there. We're back testing. So this is, I'm going to drop back down to that 60-minute chart I showed you. I just wanted to show you the bigger picture that, we took out the uptrend line there, back tested, and we haven't gone to new highs, but we haven't gone down much lower. Last thing we had there, divergent low, that sent us back up, gave us a divergent high, that sent us back down. And this is a new and still larger divergent high. It takes that divergence line from back there, indicates to me that's going to send us down to and probably below that range. But unless that happens, again, first things first. So I'm going to step back down now to a 60-minute chart. That's not it. Okay, so there's that same green line right there. I had it there before at 22,109 because it was resistance. I've had that line here for weeks now. And we broke out. And what happens to resistance once it's broken? It becomes support. And so you've had multiple pullbacks. There were two 60-minute candles right there where I circled. Two hit it perfectly almost. Yeah, another one perfectly today. And that's it. So when I drill down a little further, which I think I just showed you, we had, there's a little downtrend line off the highs. Let me grab that. I was on a 15-minute. I look at all different time frames. There it is. Little 15-minute chart. You have a little downtrend line right here. If they pop it, it's probably going to take us up. If it does, it's just going to extend the divergences if it happens anytime soon. Here's my divergence line. So if I extend that line over like this, just pull it across. Again, because I just dropped down to a 15-minute chart. Obviously, you still have bigger divergence on the 60-minute chart. But that just shows you we had a divergent high there. We're at downtrend line resistance. So, if we pop this, it'll probably take us up to marginal new and still divergent high. This is that level we've been back testing, about 22,100, right? Back test, back test, back test. That was the breakout there, that my green line. So those are the key levels to watch for the NASDAQ 100. Break below there, bearish. Should we get a rejection off here? Again, that's your first and most important support. Otherwise, a breakout, probably going to just give us a little more upside and then put in another divergent high and then do its thing. And there's ES, the S&P 500. My green line, I have it about 61, 62. There's your previous all-time highs in the futures right there. This is pretty much, it's for the most part about the level it's been capping. And you can see, again, same story. We have negative divergence currently. Any new high anytime soon, should it try to test or make as long as it's marginal. Keep saying that word marginal, because if it's anything more than marginal, if we go up 5, 8, 10, 15%, these divergences are going to get taken out. And you might even take out the divergence on the daily. You would if you went up high enough. As of now, that's not what we have. So it's just, again, I make a lot of sayings up in trading, investing. One of them I've made up and I use all the time is that in life, they say patience is a virtue. In trading, it's an absolute necessity. If you find yourself getting frustrated or you have traderitis and you just keep trying to trade the indexes and you're going nowhere, recognize the market you're in. It's in a big, sloppy, choppy trading range. I mean, there are trades to be made if you're gaming the intraday charts, but otherwise, this range is going to need to resolve itself. And the good news is no trading ranges last forever. Sooner or later it will. Then the market will start to run more in one direction or the other, and then I'll pick up trade ideas and analysis and posts. All right. Until then, let's see what happens. Two things I'm watching for. There's not really a lot to report, but I've had two price alerts in the last today and yesterday. Today I had an alert on Bank America. I'm not moving on it yet. I had a trend line alert set for a break. It's a key trend line off the October 2023 lows. 1, 2, 3. Lots of clean reactions on that trend line right there, right? Below it, also below the 50-day moving average, but not by a lot. We need to see some of the other ones break down as well. However, it is a breakdown. It's worth noting. You could take an objective, short entry. I am bearish on the financials. I think they're going to roll soon. Put a short out on KRE. It's just about where it was. It's going sideways. I think it's flat. But either way, I wanted to show you that. So if you start to get farther away from there, that breakdown will be confirmed. I had an alert yesterday on BlackRock. Similar trend line, also off the October 2023 lows right there. Nice, well-defined, but you also have price support. So what happened is BlackRock broke down, gave me the alert yesterday, but hit price support, bounced, and it's back testing right now. So to be safe, you want to see that previous reaction low get taken out, although yesterday's low will probably do the trick, and that's going to take it down at least for a test of the 200-day moving averages right there. So there's BlackRock. XLF is kind of, it's doing its thing, big, coming off that big divergent high recently, a little minor trend line break there, and just big divergence, but just I don't have strong convictions on this chart, strong enough to add that one as an official trade. There's too many other financials mixed in there, like the regional banks now, the banking sector itself, and probably add some others. Yeah, let me wrap it up here. All right, if I spot anything else that looks compelling, I'll get it out to you. As always, if you want any chart updates on anything that I've covered recently or anything else you're watching, just drop me a line in the comments section below this post, and I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.